Welcome back to the channel, everyone. Today I want to talk about how the shorts are doubling down on their short positions and how this suggests to me that endgame is here. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Unusual Whales tweeted saying just in, bearish investors are ramping up their bets against GameStop and AMC. So the article suggests that shorts are circling GameStop and AMC, sensing retail fatigue. Now obviously I'm sure you know, and I'm sure you'll agree with me, that apes do not fatigue, and if anything, we've been buying more and more AMC and GameStop, and this is only a desperation attempt by the shorts to try and convince those paper hands to sell. They're clearly running out of shares to short, or they're struggling to create additional synthetic shares, and they're trying to do absolutely anything they can for paper hands to sell their shares so they can find more shares to short. It says bearish investors are actually ramping up their bets against GameStop and AMC, spotlighting how short sellers have grown bolder during a broader market sell-off that has pummeled risky post-pandemic favourites once beloved by retail traders. It then goes on to talk about the short interest as a percentage of the float and how it's the highest it's been over the last year. I think at the moment the short interest is even higher than this 24 or 22%, now closing in towards 27%. Supposedly one of the managing directors at Charles Schwab said that retail investors are at a point now where they're just sitting on the sidelines and they've lost money in many cases. Now, I'm sure you'll agree with me that that is absolutely not the case. I've personally come across many apes that are still buying on a daily basis. Myself have also recently added some shares only last week. It says flows tracked by Goldman Sachs showed that retail investors had sold most of their US equity purchases from the last 2 years. And maybe that is the case for individual growth stocks, maybe like Lucid Motors, Neo, and many others. That is almost certainly not the case for AMC and GameStop. Obviously, Adam Aaron disclosed only a few weeks ago that retail investors on their own still hold over 80% of AMC's float, and when you include insiders and ETFs, it's well over 90%. And obviously that clearly suggests to me that retail investors are not leaving and have not left and have not sold their shares. It does say, of course, GameStop and AMC shares have been known to mount unexpected rallies that have badly hurt short sellers, making betting against them a white-knuckled affair. I think this paragraph alone shows that both AMC and GameStop are still very, very volatile, and if anything, have got even more volatile over the last year. It's got to the point now where these rallies can seemingly come out of nowhere, and over the case or over the course of a few days, the price of AMC can double, if not triple. And interestingly enough, they've said rising short interest in AMC is actually occurring at a time when the company's fundamentals are improving. As an industry play, it doesn't seem like it's a great time to short. Instead, bets against the company only reflect that institutional investors think that retail shareholders are experiencing fatigue. It just shows that these institutions and these shorts are only shorting AMC, not because it's a bad company, but simply to try and get some revenge on us, the retail investors. And I think this article comes at a very, very interesting time. It comes at a time where everything is pointing in the direction of a squeeze, but yet short sellers are seemingly more confident, aka more desperate. I want to talk about a bunch of different key catalysts that we have at the moment, but first I want to talk about this article from Zero Hedge, which is titled saying institutional investors are terrified. So why aren't they selling? And guys, if you haven't already, be sure to sign up to Moomoo using the link in the description below to get 5 free stocks worth up to $2,500 each. That's up to $12,500 in free stocks and a free share of Lucid on top of that. Moomoo and Futu have also officially announced that Moomoo does not accept payment for order flow. That's because Moomoo doesn't use those market makers and clearinghouses that are affiliated with Citadel like Apex Brokers. Moomoo actually has its own clearinghouse, Futu Incorporated, and therefore Moomoo is brilliant for buying those AMC shares. Moomoo was also recently given the award of being the best trading platform. That's because Moomoo is very easy to use, it's incredibly customizable, and it's also entirely commission free and available in the US and Australia. It says institutional investors are terrified, such as what you'd assume from recent mainstream media headlines and CNBC's continuous run of markets in turmoil. There's also plenty of indicators suggesting that retail investors and institutional investors are terrified about financial markets. Obviously, crypto has been going crazy. The stock market has been crashing over the last few months. Bonds are all over the place, and mortgage applications are at a 10-year low. We've obviously seen inflation at 40-year highs, and we've seen the Fed hiking interest rates, which is counterintuitive to do in a crashing market. This chart here shows the S&P 500 has been in a decline since the very start of 2022 and shows that actually the S&P 500 is still very much in that declining position. The S&P 500 is still very much tracking this downward channel, and even though it's risen over the last week, it's certainly not out of the dark days yet. And obviously, even though everything is pointing towards a financial crash, we haven't yet seen the VIX starting to spike, and we haven't yet seen these institutional investors capitulate, causing a massive crash. Obviously, Zero Hedge asks, why is that? Why aren't they selling? And I think it's because they are obviously trapped. They are so over-leveraged on their short positions in AMC, GameStop and many other stocks, and so heavily over-leveraged on their long positions as well, that they simply can't escape without bankrupting the fund. They've taken such heavy losses on their private investments and on their public investments as well, that they're having to store their money in the Fed's reverse repo operations and repo operations on a daily basis because they just can't escape. They've taken on such heavy losses that they can't accurately mark their positions, or they would end up being margin called and would end up going bankrupt. So at the moment, many of these large institutions are storing money in these overnight repo operations and basically hoping that the Fed and the SEC doesn't mark their investments accurately and doesn't margin call them. We're seeing the shorts double down and refusing to sell at a time when the World Bank is warning that the global economy may be headed for years of weak growth and rising prices. The article from Gold Telegraph says the World Bank cut its forecast for global economic expansion in 2022 even further, warning that several years of above average inflation and below average growth lie ahead with potentially destabilising consequences. Not only are we seeing the market crashing, the World Bank warning of recession and many other mainstream institutions also warning of this recession, but we're also seeing the AMC cost to borrow absolutely skyrocketing. In the past, I focused on the AMC cost to borrow maximum increasing and said that we really need to pay attention to the cost to borrow average and the cost to borrow minimum. In the past, we have seen this maximum rising to 10, 20 or 30%, but the average and the minimum have always stayed fairly low, between say 1 and 3%. But now not only is this cost to borrow average, but even this cost to borrow minimum is starting to rise rapidly as well, up to 9% for the minimum and 17% for the average. This is obviously at a time when the short interest is around 23-24% and the percentage of shares on loan is around 27%, if not higher. And on top of that, we still have 100% utilisation. But not only that, we're also seeing the Fed's overnight reverse repo facility hitting a new all-time high of nearly $2.1 trillion. It was only a few days ago last week where we only just broke that 2 trillion mark, and now we're close to 2.1 trillion. Obviously, I've spoken about in one of my videos before how reverse repos and repos can be used to prevent market squeezes. It says by allowing the borrowing of securities, repos help to prevent individual institutions squeezing the market in a particular security issue by cornering supply and thereby creating or exacerbating temporary imbalances between supply and demand. Obviously, these institutional investors borrow cash and securities or AMC securities in the repo market to fund leveraged investment strategies on a cost-efficient basis and also borrow securities to allow them to take short positions. So effectively, the fact these reverse repos are continually increasing shows that obviously these institutions are getting more and more desperate, borrowing more and more cash and more AMC securities, obviously to short, to try and keep the price down. But obviously this figure can't increase forever, and the fact these shorts are now getting desperate and trying to double down and spread even more FUD shows they are close to the end of the line. And something I think could really push us over the edge is Donald Trump himself retweeting or retruthing a tweet about AMC and GameStop. The Vegas chef tweeted saying, "Yes, I actually created a Truth Social profile just to confirm that this truth was actually shared by Donald Trump himself." It really was. And he's got 3.2 million followers there. This screenshot shows Donald Trump retruthing a message saying DWAC is the SPAC bringing Truth Social and Trump Media public. It says a hat tip to GameStop and AMC investors for exposing Wall Street corruption on an unprecedented level. It's time to apply lessons learned to the most feared company on the market, one with a future and fundamentals, and also one that also restores our voice. Now obviously this is a message that's been retweeted or retruthed by Donald Trump himself. And as Hang Loose said, dang, that's wild if Trump's hardcore followers actually join the AMC movement. He said it's the perfect time to potentially hit the hedgies with a fresh wave of new investors. Obviously, Donald Trump has a massive following online, and that following may not have previously heard about GameStop and AMC, but when Donald Trump's hardcore followers hear that they can fight back against Wall Street and the establishment, they may just do so by buying more AMC and GameStop shares. I think that could be a massive trigger if we have hundreds of thousands or potentially even millions of new apes joining aboard and buying AMC shares in massive numbers, just like we had back in June and January of 2021. And finally, as Crystal Ball says, the shorts knew that AMC has bottomed out and is going up from here. They know the box office is surging, they see the diversification, new business lines and revenue streams. And that's why they want you to sell so bad. They don't believe their own arguments, they're maxing out this reverse repo, and everything is pointing towards the next AMC and GameStop run up. So they have to sell you more FUD by saying or telling us that they are actually doubling down. So guys, be sure to let me know what you think down in the comments below, and also ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.